Oh, okay. I think we're in. Okay. So hopefully that's good. We're on. Everyone's on now. Okay. So let me make sure everything else is off so that should be off. Okay. So now we're on a new one. Ginger, how are you? Stefan, how are you? Everyone, welcome. Sorry for the 15-minute glitch. Okay. So also, Alicia, if you're on, you know we're going to start 15 minutes later. I apologize. So, yeah, I was going through a third party because I wanted to be able to show a whiteboard, and I have to try it again. I'm just going to do it at like 2 a.m. Okay. Stefan, do not. Okay. Helen, did you watch my 66 quick and dirty video? If you haven't, that covers what you need to know for discount cash flow, but I'll do it. Okay. Okay. So Anthony, Stefan, both taking it tomorrow. I think a few people are taking tests tomorrow. I got a couple of people taking exams tomorrow, so it should be a fun day. Alicia, I hope you heard my video that since I'm running late, we're going to start 15 minutes late, a little bit like 15 minutes late. Yeah. Okay. Ruben, yeah, definitely get a test date. So you're going to nail this. Like I said, you can do this on your own. Okay. Anthony and Stefan, you got it tomorrow. The best thing you can do is get sleep tonight. As we told Jorge or Jay, get off this as soon as you can and get to sleep. That's the most important thing you can do is get some sleep. Okay. There you go. Okay. So now, let me start a couple of things. So Helen, I'll work on the, you didn't watch my 66 video and you're on here asking me questions. No, I'm kidding. That covers, basically it's 45 minutes of gold. But before I start, I got to do my little shit. Sorry for 15-minute delay, 17-minute delay, whatever it is. If you like this stuff, hit like, I appreciate it. Tell everyone I'm doing this. Everyone you can talk to, get on here. Hopefully, I know, don't worry about it, Helen. It's fine. Don't sweat it. It really isn't a big deal. See another hat? I like this. Okay. So, just Stefan, I'm going to tell you to get the fuck off in about 2 minutes. But okay, go on. If you like what I'm doing, go on there. If you want to read free books, go down there, click on that Kindle Unlimited link, and you get Kindle Unlimited for 30 days for free. Make sure you cancel at the end of 30 days, or just you're going to be paying like, I don't know, it's like $10 a month, and you get like thousands of books. I have Achievable in the link, and I have STC. STC at a discount. Achievable is the shit. It is the fucking bomb. Achievable is the bomb on the SIE and the 7. Still work. I haven't checked the 63 out yet, but I have a feel it's good. Emily, who's on here sometimes, loves it. Okay. I'm here to tutor. If you want, reach out to me. If you don't want to pay my exorbitantly high rates, there's Michael Weiss, who's about a little bit more than half the price, and he's solid. Other free videos are mine. Obviously, my YouTube is the best there is. Then you can also go to Brandon Rith on Basic Wisdom. He has some great stuff. And then the last one is Dean Tinney. Like I said, we all have different styles. Mine and Brandon is almost the same. Dean Tinney's more long form narrative stuff, and it's good. It's great stuff. They're all good videos, all free, all will help you. Okay. Okay. So let's get going. Let's go. So now let's start from the top. Okay, Helen, I will go over. DCF is a method. Okay, remember, DCF, discount, and anyone who's not getting on late, I haven't talked about anything. Sorry about the black screen. So, I was trying a new thing, and I really have to practice that shit at night so I know what things do. So, discounted cash flow. Okay, discounted cash flow, and hopefully everyone's on. Okay, good. I love it. Hold on. Are you on? New live. Okay, everyone I can't tell anyone because you're on it already. So discounted cash flow is a method of discounting all your future cash flows. It's taking all the future cash flows. This is for the 66, not for the Series 7, not for the SIE, not for the Series 6. This is for the 65 and the Series 66. You take all the future cash flows that are coming in over like bond interest and stuff like that, and you're discounting them back to get to value today. You're trying to find present value. You're almost taking the future value, discounting it back to get a present value. That's what it is. There's the video, my 66 quick and dirty video really goes into it a little bit more, basically what you need to know for the exam, but know that it's a method. It's not an end result. Discounting cash flow is discounting all the future cash flows to bring them back to today's dollars. Okay. Now, Stefan and Anthony. Anthony and Stefan. Okay, one, get the fuck off. Go to bed. You need to go over the crunch time facts or whatever it is. If you have past perfect, if you're scoring at least in the 70s on past perfect, you have a great chance of passing, because past perfect does a horrible job of testing you, meaning they test you way too hard. They go way, way, way too hard. So listen, guys, get some sleep, get down, just relax, get some sleep, go get a massage or something like that. Okay. Whatever, melatonin, whatever it is, get some sleep, get up. Make sure when you answer the questions tomorrow, make sure that you read all 4 choices before you choose. Okay. Yeah, Ruben, I 100% agree. Do everything. Do everything on your own terms. You have time. You can spend 2 months, 3 months studying for this 66 and not worry about it, and not worry about where you are. I love it. Okay. Okay. So now that you've studied, Helen, you should be able to get the quick and dirty a little bit better. Okay. Georgiana, how are you? Ginger, how are you? I'm going to get to yours. Okay. Peter, so how did you study differently? So that's the thing. So if your attempt was a 71, Peter, how did you study the second time coming into this? Did you reread the book? If you didn't, you probably should try to read it over the next few days just to build up some more knowledge. You want to build your knowledge base, because this is the thing. I have some people that say, oh, you got a 71. I only need to get 1%. I don't like to do that. I want you to think that you missed it by 29%. If you got a 71, you missed, that means 29% of this test shit you didn't know. So you need to up everything by 10% to have that cushion. All you need is 10% across the board, and you have a cushion. Do not think I need 1%. I need you to think I need to fix everything. A little bit of everything. Okay. Okay. Now, you took 8 past perfect final, 73 lowest ones. So, oh yeah, look, your scores are good. You've done everything you can do to get it. I'm telling you, just get Stefan, get off. Pete, you're going to rock it. Tell me how you studied after. Anthony, do it. Okay, so now let me get back to this. So the de minimis, IAs and IARs have a de minimis. We care about the state level. There's a de minimis that if you have less than 15 clients, the SEC doesn't care about you. But on the state level, the de minimis is for IAs and IARs, if you have no place of business, which a seminar would be, renting a banquet hall to have a seminar would be considered a place of business, okay? Because it's not office, it's place of business. That's the wording exactly. So if you have a place of business or more than 5 clients, you have to register. The exception to that for the IAR is if you work for a federally covered IA, then as long as you don't have an office, the number of clients doesn't matter. Technically, deep in the annals, broker-dealers have a 3-person de minimis. But again, once they slap an office in there, and most states don't actually use that one, but somebody said they saw it in the exam, so I am bringing it up. Okay. Okay. Nilu, yes. Thank you for coming on, Nilu. Okay. Freaking rocked it, Nilu. Okay. Nilu, I watched her a month ago. She struggled with it. She was a nervous wreck because her job was on the line, and then she nailed it. Under all this pressure, okay? I had to cancel the old one. Okay. Now, if we have, I'm going to help Sarah out a little bit. Send the link. Good. Hope, Lisa, hope you're on here. Okay, so now, send it to everyone. Boom, just make sure they're on the new one. If you guys got that already, don't sweat it. Okay, so now, back to this. Okay. So again, Nilu, I am so happy you, okay? I am so happy with you. Lisa, that will never be on the exam. Lisa, I am telling you, the question you just asked me right there, can I elaborate on administrator can change, will not be on the exam. Okay. Okay. Let me go back a little bit. Okay. Here's the deal, Stefan. If it's under 270, it'll be exempt. So if money markets are under 270, they're exempt. If they're over 270, they won't. Okay. Okay. Yeah, 71 is absolutely the worst score ever. Okay. Okay. Yeah, Pete, hopefully you're going to answer me. Okay, Alicia, what do you need to know about yield-based calls? You need to know that yield-based calls, okay, you need to know that yield-based calls are interest rate calls. If you think interest rates are rising, you buy calls on them. If you think interest rates are dropping, you buy puts, okay? So again, if you think yields are rising, you buy calls. If you think yields are dropping, you buy puts. That's the game, okay? That's what's going on there. So if you think interest rates are rising, you buy calls. If you think interest rates are dropping, you buy puts. And if you own a bond or fixed income portfolio. See, this whole fucking thing screwed me up. The whole thing screwed me up with this black screen stuff. So if you have interest rate option, if you have interest rate bearing stuff like bonds, preferreds, any kind of fixed income, your word interest rates will rise and the value of your portfolio will drop. So you will buy interest rate calls to hedge. Remember that, Alicia. If you have a fixed income portfolio, you will buy interest rate calls to hedge because you're buying options on the calls, not on the bonds. Okay. Discounted cash flow is a method. There you go. Yeah, exactly. I'm telling you, Ruben nailed it right. He said it's he said that Ruben said after he took it, he said he felt so much better about present value, future value, because you realize you don't need to know the details, you need to know the concepts. Okay, good. Okay. Yes. Don't stress. Guys, don't stress over the big shit. Okay. Okay. For Reg T, okay. Yvonne, for this, I think you're taking the SIE if I remember right. Okay. Teray, I'm going to get your questions, I promise. Okay. So now, most important concepts to remember for Reg T. Okay, Reg T is 50%. So if you buy 30,000 in stock, you have to deposit 50%. Okay. Reg T has to do with anytime there's money and a broker dealer and a customer, Reg T is involved. Like if you want to buy stock in a margin account, you deposit 50%. If you want to buy it in a cash account, you deposit the whole thing. But Reg T also allows you 4 days to pay for it, right? So if you buy something if you buy stock, if the broker dealer lets you, if you buy stock under Reg T, you actually have 4 days, 4 business day to pay for it. Okay. Okay. Now it's, so the whole thing here is that, we're going to move along and just think of it this way. So, wow, I can't believe I totally forgot what I was going to say. Okay. Reg T, you buy stock on Monday, you actually have until Friday to pay for it. Okay. That's not the same as settlement. Settlement is T+2. If you buy stock on Monday, it has to be delivered and settled by Wednesday, but you actually have 2 more days to pay for it, T+4. Reg T is all about margin. And remember this one, when you figure out SMA and my margin videos, they would like you to have 50% equity in the account at all times. Any amount of equity that you have over 50%, you get to withdraw. That's called SMA or excess equity. So SMA is always your equity minus your Reg T. What's Reg T? Reg T is always 50% of the market value. Now, let's add a little caveat to that. Normally, if you buy stock in a margin account, you have to deposit 50%. But if that 50% is less than $2,000, you have to put down at least $2,000. Boom. Okay. Hope that helps. Now, let me get to one question on here. Okay. Let me get to Teray's question. If a customer has a gain on a short stock position and that he or she wishes to protect, which statement is true? Okay, so if we're short, there's only a couple things we can do. Well, we can either buy a call for protection, sell a put for income, do a buy limit to take a profit, or buy stop to protect. So there you go. So if you're short stock, you can either buy a call, you can sell a put for income, that's not really protection, or you can do a buy stop to protect. That's number one. Let me get to the next one. A sell stop order is executed. Okay, so a sell stop, if Teray, watch my video on order things. Sell stops are below the market. So what happens is a sell stop will be sold when the market's dropping, and it'll trigger and then trade. So it's going to be trigger, and then it's going to trade at the market price. So it's going to falling market, it's going to trigger the price, and then it will sell at the next price no matter what. Okay. Ooh, that's a long question. A registered rep receives a telephone call. I'm going to read this for everyone. A registered rep receives a telephone call from a customer who tells a rep to sell my 500 shares of ABC at the market. The representative has a record of the customer purchasing shares 2 years ago, but the shares are transferred into the customer's name and shipped to the customer at his home address. The representative asks the customers where the shares are, and the customer responds as follows. The shares are in a fireproof safe in my bedroom. The representatives can so the questions are not accept the order. Yes, of course you can accept it. Accept the sell order, but mark it short because they're not in the custody of the broker-dealer. That's not the case. Accept the sell order, but mark the order long because it can be reasonably expected the customer will deliver the shares. Yes, that's the answer. Remember, you don't actually have the possession of the orders to know that they're going to be long, and I'll get into that. But you have to be reasonably assured that they'll be delivered. And the fourth choice is not accept the order. No. So if you get an order from a customer and he goes, oh, the shares are in my vault, I'll send them to you. You're allowed to sell them and mark them long because every time you get a sell order, you must mark it either long or short. If you own the shares or they own the shares, you mark it long. If they don't own the shares, you mark it short. But here's the caveat. If they own the shares, but you do not believe that they will have it in time to settle, you are supposed to mark it short. So you got to borrow and come back to it. Okay. Hope that helps a little, Teray. I think that's all of them. Okay, let me go to Christine's questions. I feel like I'm first. Oh, she has a bunch. I can't answer all 6 of them. Okay. I can't answer all 6 of them. I mean, that's a lot. Okay. Last one. Customer places an order to buy bonds. The order reads buy 5M, which is $5,000 worth of bonds. ABC 9, the 9s reads 9%, maturing 35 at 90 GTC. That means they ordered that is a limit order. So if I say buy anything at a price, that's a limit order. It will say STP or stop if it's a stop order. And GTC means it's going to last more than 1 day. Okay. So let me get to Christine's question and then we'll get back to here. Okay. If there's no material change, does the IA still need to deliver? Okay, so this is a question they will not ask on the test because there's never a fucking time ever that an IA doesn't have some sort of change. So investment advisors must file an annual updating amendment every year. Yes, if there's no change, they don't deliver. But there has never been an IA in the history of IAs that has not had some sort of change during the year. Okay, so then, boom, they will have to deliver. So just remember, they have to deliver. You can look up the dates. I'm not going to go into that. You can look that up yourself. Annual update amendment is an annual delivery of and you update the ADV to the SEC of the state, and then you deliver it to your clients. You can look up the days you have to do it. It's 90 or 120. Okay. Okay. I was stressing over okay, folks. I am now 12 minutes. I'm only 9 minutes behind. Again, Nilo, you don't know how happy I am. I heard you screaming from your apartment over in Jersey. Okay. You remember, so BDs do have that 3-person de minimis, but it's really like never used. It's just like a throwaway question. Okay, Pete. I'm not touch on taxation. I have a whole video on that, Pete. Pete, what I want you to do is go into my must-watch Series 7. I have a whole 15-minute video that covers almost everything you needs for taxes because taxes is this wide and I can't do that. So like when somebody says, can you touch on a big project? A product that's really hard to do. So Pete, with go into my must-watch Series 7 videos and go on. There's a video called Taxes Baby. Watch that. That'll answer most of your questions. Okay. That's pretty funny, Sarah, that you have that many questions, 1,000 index cards. It is crazy. Okay. That is absolutely crazy. Okay. Make sure you didn't have a question. Okay. Okay. Can I go over all the regulations? ADT 144. Yeah, I can. I have a video on this, but I will do this because that's easy to do. Okay. So now, Reg A is small issuer. That's either up to 20 million or up to 75 million. Tier 1 is 20 million. Tier 2 is up to 75 million. The Tier 2 does not have to be registered on the state level. It's exempt from Blue Sky registration. Reg D is a private placement. But Jacqueline, this is going to be replayed tomorrow, so you can watch it on a slower speed. Reg A, small issuer. Reg D, private placement. There's 3 levels of it. Reg D 504 is 5 million or less, and you can sell to anyone you want, but you cannot advertise. does have to register on the state levels, not the SEC. Reg D 506B, you can sell to as many accredited investors. What's accredited? 1, 2, 3 accredited plus 7 and 65. So 1, 2, 3 accredited, million net worth, 200 salary, 300 salary. Okay. Either one, if they're a couple, 1 million net worth, 200 salary single, 300 miserable. I mean, married. Or if they have the series 7 or 65, they're sophisticated enough. I won't be looking at my text right now. So now, those are accredited. So on a Reg D 506B, you can sell to up to 35 non-accredited and as many accredited as you want. You cannot advertise. It does have to register on the state level. Reg D 506C is you can only sell to accredited investors, 0 non-accredited. Both 506B and C are over 5 million. 506C, you can only sell to accredited investors, 0 non-accredited. But you can advertise. Since it's only sold to accredited investors, you can advertise because even if grandma or grandpa who's not accredited wanted to buy it, they wouldn't be allowed to. So advertise to your heart's desire. 144 is basically 2 levels of this. And I've done videos on all of these. 144 is if you buy restricted shares, you have to hold it for 6 months, then sell what the fuck you want. The other part of 144 is for control people. If you're a control person, partner, officer, director, 10% owner, every time you buy shares of your own company, you don't have a holding period, but you have to sell it under 144 rules. The greater, remember the greater, and I did videos on this, so find them. Greater of 1% of the outstanding, 4 weeks trading volume, whichever is higher. The 1% of the outstanding or the 4 weeks trading volume, you can do that 4 times a year. That means every 90 days. Once you hit that number, you have to stop, or even if you don't hit that number and the 90 days ends, you have to fill out a new form and get a new number. 147 is intrastate. And I've done, again, look for my regulations video. They're probably on TikTok or on my shorts. 147 is all intrastate. That's the 80-80-80 rule. 80% of the revenues, 80% of the assets, 80% of the proceeds are from the state or in one state. And the reason it's a big deal is because if you do things in one state, you're exempt from SEC registration because you're doing it in one state. Okay, Jacqueline, there you go. Okay. Issuer does not get the spread, Stefan. Okay. So, I hope you watched my video on this. So now, PGDM is pre-sale group designated member. That's the order of priority. But now, the lead underwriter, if they sold it directly to the broker dealer. So if I sell a bond for $1,000, the underwriter is going to buy it for me for $980. That $20 is the spread. The issuer is not getting that. The issuer is getting the $980. Okay. So the lead underwriter pays $980. They then sell it out to the rest of the syndicate for $985. That means the lead underwriter gets $5. That's called the manager's fee. The rest of the underwriters buy it at $985. That's called the takedown. Then they buy it at $985 and they sell it directly to the public for $1,000. That $15 is called total takedown or concession. Okay. Now, if this lead underwriters don't want to sell directly to the public, they can hire it like a third-party marketer if they want to call it. Think Boiler Room, Wolf of Wall Street. Bunch of guys in a room, girls and guys in a room making phone calls. They have no liability, so they don't get the cheap price. They will buy it at $990 from the syndicate. The syndicate buys it at $985 for the lead. They sell it at $990 to the selling group. They make $5. That's the additional takedown. I have a video on this, Stefan. Watch it. Now, if the selling group buys it at $990, they sell it to the issuer, to the public at $1,000. They make $10. That's a selling concession. Selling concession plus additional equals the takedown. Takedown plus manager's fee equals the spread. Okay. Okay. Good. Pete, no, this is for any exam. Okay. Pete, I just put SE because I tried to get the thing out quickly because the other one got screwed up. Okay. I got a new iPhone for work and now it's figuring it out. Okay. There is a question from STC or Reg A saying, based on the size of the issue, which of the following could seek a registration exemption? Yeah, I'm not going to cancel. Okay. Now, Reg A and Reg A Tier 1 and Tier 2 are both exempt from SEC registration. Okay. So yeah, as long as it's under 75 million, it's going to be exempt from registration. Once it goes over 75, then they might have to register or move it into a Reg D. Emily, I don't know why the 65 is so hard. I don't know that it's that hard. Oh, Bree, that's awesome. I love it. Bree, I didn't even see that. I'm so sad that I didn't see this 8 minutes ago. Bree, that I am so happy for you. That's awesome. That's awesome. I guess I'm 10 minutes behind. You're probably already gone and fell asleep. I'm so happy for you. Again, Pete, no, this is not just for the SIE. I will answer any question, but like I'm not doing, I have option videos and stuff like that already. Okay. 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 Okay, Joseph. I know I'm behind. I'm like 10 minutes behind on you. So should you study deep in the 7 and 66 before you take the SIE? I don't know. Here's the thing. So if you can focus on the SIE, that's fine, do it. But there's definitely a lot of firms that make you take the 7 first, and then the SIE is a cakewalk. Save some time. But the natural progression, if you're learning, is to do the SIE to get the fundamentals, then go deeper with the 7 to get the deeper stuff, and then go fucking nuts with the 66 when it blows your brains out. Okay. Okay. Okay, Relacia. Okay, so now, what's the difference between being a broker-dealer, underwriter, market maker? Okay, all of those are types of broker-dealers. So I want you to think of the broker-dealer as like a generic term for a firm that does securities transactions. The underwriter does new issues. Okay, so remember this: broker-dealers, everyone's a broker-dealer. The underwriter, and it could be a broker-dealer could be a bunch of different ones. It could be an underwriter, a market maker, everything. So we have a retail broker, they deal with retail clients. And we have institutional ones, they deal with institutions. Then we have underwriters that help companies go public or raise money for capital. A market maker is a type of broker dealer that buys and sells securities all day long. So they're bidding and offering all day long to make a market, to make a profit on the spread between where they buy it and where they sell it. Other ways they make money on markups and markdown. But for the most part, they're all under the broker-dealer umbrella. Now, market makers make their money by trading principally, which means they use their own inventory. So they charge a markup when they're selling because the customer's buying, and they charge a markdown when they're buying because the customer's selling. It's very much like a commission. So remember, ABC, Lacey, you're going to nail this, okay? You are going to nail this. I know you will. So, where was I on this? So, ABC, agent, broker, commission, and PDM, principal, dealer, markup. Okay. Okay. Lily, I remember you. That's awesome. I remember you were taking the test the next day. Can I do more on the 63? I don't know that I need that many more. There's not much more I can do. I can do ethics, but that's like reading and prohibited activities. Like, okay, so let's see. What could I do it on? So if I did more on the 63, which I can do, watch my video where I take the exam. That'll help you. And you too, Lisa, you should make sure you watch the exam, the one I took the exam. Okay. Okay. Lily, congratulations. I remember you were saying you were taking the next day. You were nervous. We told you you'd be fine. So with the 63, what are the videos? I did agents, IAs, IARs. I could do ethics, but I don't have any, so that doesn't help. I can do it off the book. The other one is prohibited practices, which is easy, not easy, but it's fun to read. It's like reading while people do bad shit. So the prohibited practices, I could work on them, but it's probably not going to happen anytime soon. I have a bunch more to do. Okay. I agree. Anyone who studies hard for the SIE finds the 6 much easier than the SIE. Not the 7, that's a totally different world, but the 6, because remember, the SIE is covering like a wide swath of shit. And then the 6 is covering mutual funds, annuities, communications, taxes, and a little bit, and customer accounts. Lily, if you think that I have an order types, you should look. Sarah, look to see if I have an order types video. I should. I think I talk about all that stuff, but I'll talk about market orders in a second. So, where are we? So, yeah, okay, Lily and they're talking to each other. Okay, Lily and Lacey are talking to each other. So, Lily, if you have any advice to give anyone on this 6, that'd be great. Like if you have anything, what you saw, that if there was a surprise, anything surprising. Okay. Now, what are market orders? So what are limit orders first? A limit order is when you say, oh, I want to buy stock at a price, like say 42. So I do this on the one video, but let's talk about it. So I have stocks trading at 50. I don't want to pay 50. I want to pay like 48. So I'll say buy 100 shares at 48. I will not pay higher than that. That's a limit order. You're saying I want to buy 100 at 48 and I'll buy it at 48, but I'm not paying 48.01. I'm not paying 49. I'm paying 48 or better. So if they come in and say I'll sell stock below 48, totally cool. I'll buy them. A market order is going, hey, buy the stock. I'll just buy it. And what happens is you buy it at whatever price is available. So if you do a market order, if you have a market order to buy, you will buy it at the offer because you will buy it at where it's offered at. Okay. You will buy it where they're willing to sell it. If you have a market order to sell, you will sell it where they're willing to buy it. Okay. So if you have a market order, say the market's 42 bid, 44 offer. Okay. If I give you a market order to buy, you're going to buy what you can at 44. And then if you still have more to buy, you'll keep buying it and moving it up. Okay. Now, if you sell, you're going to sell at the bid at 42. And if you still have more to go, you'll keep selling on the way down. So market orders have there's not really, we always care about price, but market orders don't have any price parameters where just buy the thing because I really, really want the stock or I really want to get rid of it. So market orders are always about buying it and price is not really an issue. Okay. Now, yeah, Teray, Alicia, I'll get to your question in a second. Teray, I 100% agree. I pass perfect will make you doubt yourself. Have you done, I think you're taking a test tomorrow. Have you done my 2 videos where I take the test online? Try them. And if you feel good with that, you should be fine. Okay. Alicia, if I sell the stock on the X day, the day before the record date, the investor who sold the stock will be entitled to dividend, but not the buyer. Yes. So let's talk about that. So if we talk about X dividend and all that, so we have a record date of Thursday. That means you have to buy it by Tuesday to get the dividend. So if you buy it on Monday, the buyer gets a dividend. You buy it on Tuesday, you get the dividend. That's called the cum date, CUM. Wednesday. So think about it. If you buy it on Tuesday, it settles on Thursday, which is a record date. Boom. Okay. Now, if you buy it on Tuesday, you settle on Thursday, so you get the dividend. If you buy it on Wednesday, you settle on Friday, which is after the record day, so you don't get the dividend. So then the seller does. Okay. So if you buy, it's either going to be this, either the buyer gets it or the seller gets it. So if the record date's Thursday, if you buy it before the X day, you get the dividend. If you buy it on the X day, you don't get the dividend, but the seller does. Okay. Good, Lily. Thank you. I failed the SIE by 1 point after using Kaplan. Here's the one thing you have to remember: these, no matter what anyone tells you, these tests are not trying to trick you. If you're just memorizing buzzwords, yes, they're trying to trick you. But if you try to learn the stuff, they are very straightforward. The answers may not be good, but they're not trying to trick you. If you see an answer that looks good, it's the answer. Don't because Past Perfect, STC, Kaplan, all of them, even Achievable a little bit, they try to trick you so much. Achievable is better on that, and STC is better. But I think Kaplan and Past Perfect go out of their way to try to trick you, so that what happens is when you walk into the exam, you're looking for the tricks, and you're not taking the obvious answer when it's an easy gimme question. So don't think they're trying to trick you. I need you to go into this exam thinking, I'm going to answer the question they give me. I'm not going to overthink it. I'm not going to try to wrap myself around. Okay? I'm not going to sit there and do that stuff. Okay. So yeah, if you look, Joseph, if you look on my playlist called Taking Finals, I have 3. I think I took 3 SIE exams on there, and then I took 2 Series 7. There's one from April, and then one from about 6 months before. They're both good, I think. But what do I know? Okay. Yeah. So stop thinking they're going to trick you. Don't wait for the other shoe to drop. Just answer the question in front of you. Don't bring as I tell everyone, don't bring your own shit into the test. Don't be panicky. Don't be anxious. Just relax. And remember, the answer is there. I can't say that enough. This is not an essay test. So if they ask you a question, remember, the answer is there. You just got to find it. Okay? Don't think Don't overthink it. Yeah, Jacqueline, yes. I have a video called Suitability in the Series 7 Must Watch. It's about 12 minutes long, and it's really good. Okay. Shaba, how are you? Yeah, so Teray, just take it easy. Watch the videos where I take the exam. Get yourself used to it. This way, there's an SDC, an achievable one on there that you can see what it looks like versus Past Perfect, which is an ass kicker. They really are. Okay? Okay. Now, Teray, which callable muni bond quoted on a yield basis will be priced to the nearest in-hall call date? Okay. Always remember, if you have a premium bond, it's quoted to the call date. And it's never a partial to a whole date. It's always the in-hall call date. If you have a discount bond, it's always to the yield to maturity. So discount, yield to maturity, premium, yield to call. And that's why they say yield to worst, because on a premium, yield to call is the worst. On a discount, yield to maturity is the worst of the two. It's not worst of all the yields, just worst of the yield to maturity or yield to call. Boom. Okay. 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 That's true, Alicia. I'm going to start doing more of those. Alicia, you're right. I'm going to start doing more of those quick one topic videos so you can just listen as you're driving. Just don't get in an accident. Like, oh my God, his voice is killing me. Okay, can I talk about the bond buyer? Sure. Oh, you're going to do it now? So the bond buyer, don't overthink the bond buyer. The bond buyer, it's not that big, okay? The bond buyer, if you go on, just type in bondbuyer.com. It's a website. Okay. All it is about muni new issues. Like if you wanted, if an issuer, meaning a city or state, wants to release it, that's an easy one. I bet you one of my students can tell you how I teach that while I'm handling Alicia. Sorry. Okay. So now, the bond buyer is a magazine or a website that is all about new issue munis. So that's where if they're going to announce a new issue, the notice of sale, it goes in the bond buyer. And they have indexes in there and they talk about the visible supply. What's that? That's all the new bonds coming due in the next 30 days. You can figure out the placement ratio, which is where how many bonds are issued versus how many are placed. They can do the indexes. Always remember, whenever bonds are talked about in the bond buyer, it's the dollar amount. No worry about it, John. No worries. It's always the dollar amount, not the bond. Like they're not going to say 40 bonds. They're going to say $40,000 for the bonds, which is 40 bonds. Okay. They're always going to use the dollar amount. Okay, Lily. I like either. Okay, let me get to Relatia first. Relatia, here's the deal on settlement. Super fucking easy. Everything is Jacqueline, don't even worry about it. Don't registrar versus the agent. I'll talk about that. Okay, so now here's the deal, Relatia. I think you're saying that Relatia. I think I'm saying it right. So everything is T+2. Say that with me. Everything is T+2 except for two things: treasuries and options. Everything's T+2 except for treasuries and options. Treasuries are always T+1. Options, okay? Options, fucking A, they had a delta problem. Oh my God. Okay, so we'll talk about. I'm going to go quick, but you're not going to see it. But in case you see, you'll never see a question on that. Okay, or it's an experimental. Okay, now again, only two things that are T+1 are treasuries and options. Now, the only caveat to that on the Series 7 and the SIE and the 66, I guess they could do it. Okay, is hold on. Don't worry about it. They're not going to ask about a rollover. Okay. Where are we? Okay. So options, if you trade options, it's T+1. If you exercise equity options, it's T+2. Because remember, if you buy a call or buy a put on a stock, when you exercise it, you're delivering the shares. So that's T+2. Okay. And so equity trading, all equity options trading, all option trading is T+1. Treasuries is T+1. If you have an index option, it's T+1 settlement also for the trading and the exercise. Equity options are always T+1 to trade, T+2 to settle. Why? Because when you buy stock or sell stock, it's always T+2. Okay. Now, okay. What's a good way to remember the duties of the transfer agent? Probably not a big deal. So the transfer agent is the one, think of it this way. The transfer agent is the one who, and again, probably not testable, so I'm not going deep into it. The transfer agent is the one who changes the name. So if you buy shares from Bobby and Bobby sells them to Mary, he or she is changing the name from your name to Bobby on the record date. They're changing the name from Bobby to Mary to back to whatever it is. The transfer agent handles all that. If there's a 144 stock, there's a legend on it that says you can't sell it. You send it to them, and then they send you ones without the legend. They clear it. They're the ones who also look for good delivery. The registrars are fucking boss. They just make sure the list is good and they watch them over. That's kind of it. Okay. Issuer versus underwriter. The issuer is the actual company trying to raise money. Tesla, IBM, Facebook, they're trying to raise money. The underwriter is the broker-dealer helping them go public. The underwriter is not Lisa, SEC. The underwriter, so broker-dealers are registered with the SEC, FINRA in the state. Broker-dealers registered with SEC, Lisa. There you go. So now, back to this. So the underwriter, see my ADD. The underwriter is a broker-dealer helping the issuer go public. The issuer is the one getting the money for going public. Okay. Lisa, you heard me? It goes SEC, FINRA, and then the state. You cannot be a FINRA broker-dealer until you're registered with the SEC. You cannot be in a state until you're registered with the SEC. Boom. Somebody got that on the test. Maybe I didn't say that. Maybe I did. So somebody got that. Who would you register with first? And SEC is definitely going to be the one. Okay. So here's the thing on Delta, what you have to know. Okay. Again, Lily, get the STC, or go into my link and you can get it there, get a discount, or get the Achievable. Achievable is pretty cheap and pretty fucking solid for the Series 63. Now, Jessica, Delta won't even be on the Series 7. Yes, RNK, they give you a basic. You have basics. You have a basic calculator to work with. They do give you one. Okay. And Jacqueline, I'll get to your cash thing. So where are you? Delta. Okay. So Delta is how much an option moves compared to the underlying stock. And it only really happens if the stock is out of the money, which means it's not exercisable. So like if you have a 40 Delta, that means for every dollar the stock moves, the option will move 40 cents. And as the stock gets closer and closer to being in the money, it'll go closer and closer to 1. So if you have a Delta of 60, that means the option will move 60% of whatever the stock moves. That's all Delta is. So Delta position is you're just adjusting the options you buy to reflect that. So if you own 100 shares of stock and it has a 50 Delta, you'll probably do twice as many options as you do on the stock. So if you bought 100 shares and it's a 50 Delta, to really cover it, you'd actually buy 2 calls, not on the test. It just knows that, God forbid they ask on the real exam, it's just you're adjusting your options up or down based on how volatile the option is. Okay. Option is not T plus 3. Nothing is T plus 3 anymore. Nothing is T plus 3. Okay. Okay, Cabergoon, I'm happy you're jumping in on this. That's awesome. Welcome on. That's a hell of a name. Cabergoon, Cabulous. That sounds like a play that I've seen one time. That's great. Okay. Now, also cash. So here's the thing, Jacqueline. Very true. Cash is nothing trades, nothing settles cash. Okay. So if you do a cash trade or cash settlement, you are choosing to settle the same day. There's no product that is cash settlement. Okay. So I know that you're kidding and I think it's funny, but I want to get this out there. So if you buy or sell something and you know what, I want to settle it today, you can say, I want to do it on a cash settlement. That tells them that they want to settle the same day by 2:30. Okay, good. I hope that helps a little bit. Nothing is T plus 3. Okay. Right. So, but remember, keep in mind that cash. I know that I probably answered it and they're talking about it. Cash is nothing settles on a cash basis. That's a choice. Like you can choose to be seller's options, which you choose when you want. You can choose T plus 1. If you buy stock, you can say, I want a next day settle. You can choose that. So cash and next day, other than for options and treasuries, is a choice. You choose to do it. It's like a one-off. Okay. If Nilu's on here, she can tell you. I am not a fan of taking the exams. Yep. Okay. I am not. I do not yet. I am not a fan of online exams because she had a problem. She took it and she passed it, but the Friday before, it was a fucking horror show. She couldn't log in. Her work computer had some firewalls, And then they said you can't. She was sitting there for an hour online thinking she was going to run out of time. And then they just told her, I even told her, don't take it. Even if they tell you to take it, don't. Because if something goes wrong, I'm not a fan of it. You can take the SIE or the 63, probably okay. I would not take the 7 online because you can't really do a hot sheet, okay? Okay. Okay. Now, guys, if you texted me after 8:30, I can't look at it, okay? That's why I say everything and ask me do before 8:30 so I can look at it because I can't keep doing that. So if you take the exam online, okay? If you take the exam online on your remote, you're not going to get a calculator. You have to use the one on the screen, and there's a notepad. You can't draw. You have to type on it, which it makes it kind of hard, okay? But if you go in person, you get a crappy wax paper like whiteboardy thing, but you get a physical calculator, and I think there's even a notepad on the screen, so you can do a lot of stuff, a lot more stuff. Okay. Okay, CB, thank you. I love that. Okay. Okay, Joe, welcome back. Yeah, I'm a grandpa second time. Okay. Okay. Yeah, so good. Alicia, nice. I love that. You're answering questions for me. I love that shit. I love that. I love when you take some pressure off me. Okay. How are both REITs and limited partnerships 20% tax deductible? They're not. Okay. I don't know where you would see that. Text me that later and I'll try to help. Okay. So, Teray, I don't know that REITs and LPs are 20% tax deductible. They're not, they're not tax deductible. There's nothing on them that's tax deductible. Right, because you're right. That's not true. I don't know where the question was. That's what I wanted to talk about real quick, because a lot of people just take a lot of questions. And the problem is that if you take a lot of questions, you're going to get like some false positives on there. Like this is a question everyone gets on the real exam. 0 coupons are exempt because. So in your mind, you're thinking you answer that and you whatever. Or they say 0 coupons are exempt from what? And the answers are like interest rate risk, credit risk, whatever it is. And it's actually registration because you can't be exempt from a risk. You can be exempt from registration or taxation. But when you read that question, you start thinking, wait, on the Series 7, the SIE, the Series 6, you think, oh, 0 coupons are exempt. They're not. It's just that if a 0 coupon or any other security is called exempt, it's exempt from registration or taxes. So what happens is you read on a question, you just do questions. You see 0 coupons are exempt because of this, or they are exempt from registration. So in your mind, you think 0 coupons are exempt, but they're not. Only if they're, the only time they're exempt is really if they're under 270 days or they're issued by a treasury or a muni. So that's why I'm a fan of reading way more than taking questions, because you get false positives. Okay. Again, Teray, they're of limited partnerships. The difference between REITs and limited partnerships: REITs pass through all their gains, not their losses. Fully taxable, but the only reason is they distribute 90% of their income so that you get money that's never been taxed. REITs, real estate limited partnerships pass through gains and losses. Okay, so the partnership actually distributes gains and losses. Losses are not always bad; they're sometimes called write-offs, so it's not a big deal. Okay. And Alicia, don't worry, we will get started in about 10 minutes. Okay. So, okay. Okay. So, CB, first thing, if you're learning options for the SIE, first of all, watch the one chapter I have. I have a chapter on options. Watch that. Don't worry about get the basics. Don't worry about the big hedging and all that crap. Just get the basics down. What to buy call, buy put. I have a whole thing in the SIE, the book playlist I have. I go through all the chapters of the STC book line by line. I give them a review and I go through the highlights. But I have one on options. I think it's chapter 9 or 10. It's just on options. What's in there you need to know. That'll help you. For the 7, it'll be harder. But for the SIE, pretty basic options. Okay. Josie, back in the saddle. Yeah, again, I'm a grandpa. So, Jessica, cycle fund. If they mean life cycle, okay, a life cycle fund, there's either cyclical where they change with they adjust based on the economic cycles. But a life cycle fund means so you guys are in your 20s, right? If you guys are Peter, I'll answer your question in 1 second. So if you're in your 20s, maybe the fund will be set up as 80% equities, 20% bonds. As you get older in your life, they will start adjusting it. So when you turn 40, maybe it'll be 40% bonds and 60% equities. Then when you get to 60, it'll be reversed. And when you get to 80, so it's life cycle funds means they adjust your breakup based on your age. Josie, good. I love that. We got this. Just keep going. Keep reading, Joe. On this Series 7, just first of all, get through the book at least once or twice. Okay. Now, Peter, is capital gains tax a more favorable rate than ordinary income? Well, it depends. Okay. So, Sarah, you got, see, lately I've heard in the last month or so, they get the 4 double-sided pieces of like whiteboardy paper. For the COVID, they went to paper. And then like a month or two ago, they switched back, which just sucks. Now, Pete, capital gains, if it's a long-term capital gain, okay? If it's a long-term capital gain, it'll be at 15 or 20% max, depending how rich you are. Ordinary income is up to 35, 39%. So yes, capital gains, if it's long-term, has a more favorable tax rate, okay? Ordinary income, yeah, but if it's short-term, if it's a short-term capital gain, it's taxed just like ordinary income. Hope that helps. Okay. Thank you. Grandkid number 2. And now I got a beautiful son and a beautiful granddaughter. Okay. Grandson and granddaughter. Okay. I do have beautiful daughters and sons, but okay. Right. Okay. Okay. Why is this considered an issuer transaction? Okay. So here's the question. An issuer transaction means the issuer is getting money. So RGR Corporation, somebody's buying their shares. So that's an issuer transaction. Yes, I do. Rachel, I'll get to you in a second. So, right, but it's almost always going to be. So, Joe, it's right. Capital gains, long-term capital gains is always better than ordinary income. Because remember, it's not automatically 15%. So on the Series 7, the SIE, and the 66, you might get questions, and the 65, you might get questions like this. So capital gains, if you have a long-term capital gain, it's based on your tax bracket. So if your tax bracket's 10, they're not charging you 15, they're charging you 10, but it'll never cap out more than 15 or 20%. It'll never go above that. Okay. Now, why is it considered an issuer transaction? RGR Corporation. So if the issuer is receiving money, and they are in a going private transaction, the company might be issuing more shares. It's a really nuanced question because most of the time they buy their securities that buy in the secondary market. But if the company is selling shares, then they'd be pre-issuer. Again, Lisa, it's way too fucking deep. Obviously, you're using past perfect, I think. Okay? Or Kaplan. Again, when you see the test tomorrow, pass or fail, you will see that it's not that deep. Okay? Okay, Rachel Witt. Yes, I do. There's 2 ways to do it. One, if you have other people, we can do a group tutoring session. If not, you join the membership group. I have 3 tiers of membership. I have $10 where they can see my videos, which is pretty much the option videos. I have the $25 a month one, which means right now it's going to be 1 day a week, but for a little bit, it's 2 times a week, Sundays and Mondays, but not this Sunday because I have my daughter's graduation. So Monday at 4 p.m., I do a group session on Zoom. I'm limiting it to the 7. If it's 63 or 65, I try to give them their own 20-minute session. But this is an hour on Zoom. The only issue is it could be 1 person, 5 people, or 30 people. I don't know. And I do a good job of spreading it around and getting everyone involved. And you can watch. So, Rachel, if you want to see what a membership group looks like, which is my group tutoring, go on, and I posted some of them in the membership playlist. If not, if you can find someone else, I do group tutoring where I have 1 or 2 people in a group. I do that all the time. Okay. Most of my shit is one-on-one, but a lot, I do definitely do some group stuff. Okay. Right. Exactly. SIE is most of the stuff in the 7, just stuff. Okay. Yeah. The only thing is the problem is sometimes you don't want to go too deep. Like if you go to a person who trades options, okay. If you go to a person who trade, I haven't checked out Roseanne, so I don't know. But if you go to a person who trades options, they might teach you a way that's different than the exam because the exams are more basic and more about break even, max gain, max loss. But if they help, I understand. Go for it. Okay. Josh Cousteau. If you can pass the SE, what type of jobs can you apply for? Not much. I mean, you can apply for any job, whether you have it or not. Just the SIE doesn't get, it's not a registration. All it is like it's the basic skills. It doesn't give you anything up other than at least it looks better on your resume when you apply for a job in Wall Street or finance, whatever it is. If you apply for a job in any of those, it shows if you have the SIE before you start, it looks better. That's all it can do. It doesn't really do much for you. Okay. Joe, yeah, STC is also STC between STC and Kaplan, you're good. And if you anyone studying for the SAE, just get the Achievable. I have a link in here. It's fucking awesome, game changer. Okay. Yes, so Life Cycle is very much like a target date fund. It's just a different type. Okay. No, not a dumb. There's no dumb questions. Okay. EM, that's awesome. EM, how far behind? I'm 6 minutes. EM, that is awesome. Congratulations, my man. I think, man. Okay. I love it. I love it. Okay. That's awesome. I am so happy hearing people pass. What's your next exam if you're still on? Okay. So remember something. The real exam does not. No, Sarah, no Sunday. I'm only doing Monday because of my daughter's graduation. Okay. So where were we? Okay, so Jacqueline, remember this. If it's an OID, you must accrete. Remember that. OID, you must accrete. That means it's a zero coupon. You have to accrete. That's the one you have to remember. Everything else on the discount side doesn't have to. Okay. On the premium side, only munis must amortize. Corporate treasuries don't have to. So really just remember the two musts. OID, you must accrete, and munis premiums must amortize. Okay. If you like what I'm doing, hit like. Don't worry about that. Okay. Now, Joe C, correct. Munis have more tax advantages. Corporations have no tax advantages. Munis, the interest is tax-free. Okay, EM, they'll probably make you do the 7 first. Most people make you do the 7, okay? Most people do 7, then 63. Okay. Right, so some people do the 7. If you're just going to be an agent, you do the 63. If you're going to do like managing money, you're going to do the 66. Okay. That's true. Okay. So now I'm going to yeah, of course it is, because it's $100 and some bucks. It's trust me, I have so many people that did Past Perfect and they moved to Achievable. Okay. Yeah, most places do SIE, then 7, then 63 or 66. Okay. So Derek, don't be scared. It's going to be good. So what you do is if you watch my videos, that'll help. Go on perfect. So no more questions because I can't keep Alicia up all night when she has a test very soon. Okay. And I don't want to be up all late because I have to drive to Richmond tomorrow. So now, Derek, for the SIE, watch the videos. If you don't have books yet, save your money. Don't spend a lot. Go on. I have a link here for Achievable, which is like $80. All the other book brand vendors are like $150, $200. For the SIE, the Achievable is fucking awesome. It's really the best. Okay. Yes. And CB, I agree. I think it's worth it because it simplifies you. If you have Past Perfect and then you get the Achievable to help you out, it's going to simplify some of the stuff. It really does. Okay. Now, last thing. Okay. Lisa. And then, okay, let me do one thing. Somebody asked a question. Okay. An exempt reporting advisor is not an exempt or registered advisor, an exempt reporting advisor. It's an investor. I'm not going to go deeper than what I say. An exempt reporting advisor. Okay. Awesome. And just, you can even save money and just watch my videos at first. And then if your company gives you books, it's great. But really, the Achievable is super cheap. Exempt reporting advisors. They are investment advisors that either manage private funds, they're either a private fund advisor or a venture capitalist advisor. If they're a venture capitalist advisor, all they're doing, no matter how much money they have, they're just reporting their financials to the SEC, but they're not registering. If you're a private fund advisor, you are, again, reporting your financials to the SEC, but you're not registering until you have over $150 million. Once you're managing over $150 million, you have to register with the SEC. That's all they are, exempt reporting. That means they're reporting their financials, but they don't have to register. Venture capitalists, there's no money cap. They will never register. Private fund, they will register once they manage over $150 million. Okay. Now, Lisa, last one. Federal covered. Stefan, why are you still on? Go to bed. Okay. Boom. You're going to nail it. Good night, Stefan. Get off of here. You and Anthony have to go to bed now. Okay. Go. Get out of here. True. More money, less oversight. That's true. Okay. So now, federal covered advisors are required to register with the SEC. Yeah. Okay. Yes. So yeah, anytime something changes, anything that's material, you have to file if you have a notice filing, yeah. So if you're a federal covered advisor, you will have to notice file in any state that you have a place of business or 5 or more clients. And everything that you file with the SEC, you have to send to the states. You're not registering with the states, you're just sending a notification. Sarah, you're going to, you're taking it Monday morning? Oh, I'll see if I can do something Sunday when I get home. It might be later, like 8 o'clock, but we'll see. Because I'm leaving Richmond at noon. Maybe, Sarah, I will definitely try to do something Sunday night, okay? If not, I'll reach out to you. Maybe I can do something on the phone real quick. Okay. Now, yep, perfect. So now the next thing is, guys, if you like what I'm doing, hit the like, subscribe, tell your professors, tell everyone to do this. Watch this. I'm trying to build this shit up so I can do this, more of this. Because if I make enough money, I can do this every night and just ask questions. Stefan, you're going to nail it. Anthony, you're going to nail it. Okay. Now, please reach out. If you need tutoring, I can help you. If I'm too expensive, there's Michael Weiss. He's good. I think he's like 79 or 80 bucks an hour. It's really good. If you like the YouTube videos, the free ones, obviously the one you're on is the best in the world. Then we have Brandon Rith, which is at Basic Wisdom. He, again, same style as me. And you can also take a look in Dean Tinney. He has some great stuff. He has a lot of questions on his stuff. He does a lot of stuff. Okay. Yeah, do your job, my man. Okay. Hey, that's passing. Yeah, anything over 53 is a passing. John Von Schmidt, Wrestling with Stocks. Okay. Boom. Okay. I love it, guys. Achievable. It's called Achievable. If you want, anyone who's going to buy it, go into my link right there. It throws me a couple bucks. Go in there and buy the Achievable. That link that I put in my description, or if you want SDC, you can get a discount from there. Let's do this. We got this, ladies and men. Stefan and Anthony, get off here. Good night. Sarah, if I don't talk to you, I will. You got this. And Alicia, I'm going to text you in about 2 minutes. Everyone, Achievable. And it's a link. Just go into the link. It's the easiest one here. Then you can get it. I will talk to you all. And you get, by the way, you get a little free trial. They can try it out before you have to pull it. Okay. I'll see you on Tuesday night. And if you want to watch this again, just wait an hour and it'll be reposted. Have a good night.